All right, let's get right to it. You are leaving money on the table. Not maybe, not kind of, not a little bit. I mean, you're probably leaving hundreds to maybe thousands of dollars because you're missing some deductions you're legally entitled to. And you know what the worst part is? The IRS ain't gonna tap you on the shoulder like, hey, you forgot to take this one. Nope. They just gonna keep your money and wave their hand goodbye and just wish you a blessed day. So today we're gonna break down the top tax deductions most people miss, especially if you're like a creator, a side hustler, business owner, even if you're a W-2 worker. Welcome back to another episode of Millennial Gems, where I make sure that I won't let the IRS bully you. I am your host, AKILA, and you know what? We're going to stop the bleeding. We're going to get right into it. So, the first deduction most people miss out on would be mileage. Car mileage is probably, I think, probably one of the most slept on deductions in America. I honestly, I will hold you. I haven't taken advantage as much as the car mileage. Probably back in like 2023 when I was doing Amazon FBM, and right before work, I was driving my car. After packaging, after putting packages up together, bringing them over to UPS. I could have probably rolled off that mileage from my house to the UPS. But again, if you drive for anything, business related, again, like I said, bringing orders to like the post office or UPS, there's work travel. If you're going to a photo shoot, if you're picking up supplies, that's another one I probably should have taken advantage of too. Because I would go to Staples a lot to buy boxes and supplies and stuff like that. So, and when I was going to like Stop and Shop and all these other places to just buy like items, Walmart, I could have definitely wrote that stuff off. But again, I wasn't probably doing a good job. I didn't do a good job of tracking it. So, client meetings, these are all things that are business related, and that mileage is, so I believe as of 2025 is worth about 67 cents per mile. So you drive 1,000 business miles, that's about $670 in a deduction. Say you drive maybe like 5,000 miles, you probably get like $3,350 in a tax deduction just from driving. The trick is you got to track it, and that's where I definitely lacked off, was not tracking it. So if you don't track it, there's no deductions. Plain and simple. Now, there are a couple apps you can look into if you want to start tracking your mileage. You have Stride, which that's new to me. I've heard of Mile IQ. QuickBooks also has a mileage tracker, so I could easily do that for anybody who needs to track it. But yeah, mileage is probably one of them ones a lot of people just don't take advantage of. All right. Second deduction would be the home office. So many people are probably terrified of this one because they think it's possibly like an audit trigger. Now, if you use part of your home regularly and exclusively for business, you can deduct a portion of your rent, mortgage, the utilities, the Wi-Fi, the home insurance, any repairs to that workspace. You can write this stuff. You can write your home office. You can take the home office deduction. If your space is small, you can use a simplified method. $5 per square foot up to 300 square feet. It's easy, it's clean, legal. A good example is, if you do, uh, what is it? $5. Let's see. 5 times, let's say like 150 or so, right? 100 square feet. That's going to give you about $750 in a tax home office deduction. So 150 square feet times $5, $750. So let's be honest. Stop working at the dinner table. Stop working in your bedroom and leaving money behind. Find a designated space in your house that you can use strictly and exclusively for business and write it off. All right. Another one that we probably ignore a lot is your phone and the internet. I'm absolutely positive that a lot of people who are in business use their phone for business purposes. If you use your phone for internet, if you use your phone or your internet for business, you qualify. Most people will mix personal and business use. So you just take a percentage. So say if, 60% of your phone is business related, then that 60% is deductible. If your Wi-Fi basically is the reason your business exists, well, you already know what the answer to that is. It's deductible. And, and this can apply for, content creators, people like the finance space, the bookkeepers. If you're an e-com seller, if you're an online coach, basically, like I said, anybody who's doing things for business and needs like internet in their phone for business purposes, using them for business purposes. Okay. Number 4, education and skill building, right? So this one I definitely always make sure I write off. If you buy anything that makes you better at the business you already run, it's deductible. And that includes things like courses, workshops, conferences you attend, any books you buy, any master classes you attend, any online learning subscriptions, any skill-specific certifications, any coaching programs that you pay for. Like, you probably end up on like some of like these webinars, right? And they'll tell you like at the end of their funnel, there's a course, and that course is like $297. Well, why didn't you deduct it? That's a whole deduction. You bought that course for $297 or $97 or whatever it was, that ebook for $37, you write that off. That's helpful to your business. That's it's literally, I honestly think it's like a financial crime if you don't write that, if you don't write off courses and stuff like that, anything continuing education. Like, it's literally a financial crime against yourself. So write off all of those continuing education and skill building assets that you use to help build your business. All right. Let's see. A 5th tax deduction I think most people probably sometimes ignore maybe is software and subscriptions. Now, nobody remembers these until tax time. And then you're digging through like random emails like it's an Easter hunt, like, what softwares and subscriptions should you be writing off? Well, I use QuickBooks. Well, actually, I don't pay for QuickBooks because I am a QuickBooks Pro advisor. But if you're a business owner who pays for QuickBooks, you should be writing off whatever that subscription you're on every month. If you use Canva Pro, you can write that off. If you use Adobe, if you use Zoom's higher tier plans, if you use Calendly or Acuity, if you're an e-commerce seller, if you're using Shopify, write that off. If you pay for Stripe payments, any CRMs, all those marketing tools, like anything like that, any type of like software subscription that you pay for that helps run your business, write that off. If it helps you run the business, it's deductible. Period. Okay. All right. So let's be real. Tax season doesn't start in January. It starts when you get serious about your money. At Millennial Gems Financial Solutions, we help self-employed hustlers, entrepreneurs, business owners stay ready year round. Whether it's clean bookkeeping, tax prep, or setting up systems so you can finally understand your numbers, our goal is simple. Provide clarity, protect your peace of mind, and help you keep more of what you make. You've worked too hard to give Uncle Sam more than you owe. So let's fix that. Visit millennialgemsbk.com to book your consultation today. Oh, the next one, number 6, would be equipment and gear. So I have a podcast, right? So my mic is tax deductible because I use it for my business. I use it to talk about my business. My Rodecaster Duo was a business expense. I can write that off because, again, I use it to help promote my business. Your cameras, if you have your cameras, that's deductible. Cameras, lenses, lighting, microphones, tripods, computers, hard drives, editing softwares if you use Final Cut Pro. Even the desk you sit at, you can write that off. It's all related to you, how you run your business. It's necessary. Ordinary and necessary. Remember that. And then, thanks to Section 179, you can deduct the entire cost in the first year instead of over several years as of this year. So, IRS is pretty much saying create content on us. Like, this is why I keep emphasizing that, the tax code is literally made for entrepreneurs. Like, you're not going to be able to take tax deductions. It's hard to take tax deductions if you're just an employee. It's way better if you have something outside of your job that helps you make money. The IRS will let you write that off. Okay. Let's see. Number 7. How about travel and meals, right? Now, this one you have to be a little careful with because you don't want to mess this up because the IRS doesn't play when it comes to this stuff. So if you travel primarily for business, not you going on vacation for your personal reason, not to celebrate you can write off birthday parties and stuff like that. If you have you guys discuss, business related content at the birthday party or so. I did learn that hack from Carter Cofield. Shout out to Melanin Money, Carter and George. But you can do that. Oh, also, and Carlton Dennis. I did learn that from these gentlemen. But you need to be, if you're going to travel primarily for business, you can write off your flights, your hotels, your rental cars, your Uber, Lyft, baggage fees. Like, you can write that off. But again, you don't want to play around and, try to write off a flight that was for personal use. Like, only for business travel. If you entertain clients or have a legitimate business meal, you can deduct up to 50%. And the rule is you have to write on the receipt that the meeting, like what you discussed at the meeting, you have to discuss who was there and what was discussed. You can't go claiming dinner with Bay, business strategy meeting. The IRS is, they ain't gonna fall for that. You feel me? Like, they're not your wingman. So you just need to just play it smart when it comes to, business travel and trying to take deductions. Make sure it's all business. All right. Let's get into number 8. Retirement contributions. This one I'm still a little bit new to as well. But most people will sleep on this one because honestly it might sound boring, but retirement contributions can reduce your taxable income. If you have things like traditional IRA, if you have a SEP IRA, which is what probably a lot of business owners sign up for. If you have a solo 401k, even a $2,000 like contribution can drop your tax bill. So you have the tax savings now, your money grows later. Shoot, you win twice. But yeah, some of those retirement accounts you can write off your contributions for that to help lower your taxable income. All right. Let's go through 2 more. So, startup costs, right? So if your business is literally brand new, you can deduct up to $5,000 of startup costs in the first year. And that can include branding, all your legal fees, your marketing, your website creation, any equipment, training, business formation fees. Like when you register your business through that Secretary of State, whatever you pay, you can write that off. Whatever you pay for your logo, write that off. When you create your website, that domain, you can write that off. Any insurance and stuff like that, like legal fees, you can write that off. So, don't let that startup phase be a phase that, be a broke phase. Again, this is something that I didn't really know at first, but, again, I just want to share it to all my new business owners. All right. And then let's do one more. So the last one will be bookkeeping, right? If you pay someone to keep your books clean and organized, it's deductible. If you use a software to keep your books, it's deductible. Things that save you money is also something you can write off. That's the irony. QuickBooks, like I mentioned earlier, if you pay for that QuickBooks subscription, you can write that off. Or if you're not doing your own QuickBooks, categorizing and reconciliation, and you're paying somebody for that, you can write that off. You can write off professional services and stuff like that. I believe I mentioned that in another episode, so make sure you go back to that one. All right, so those are 10 different tax deductions that people will typically tend to miss. So now you're probably like, I'm missing a whole tax season worth of deductions. Then, well, you know what? Stop playing the guessing game then and let me help you. You see, if you go to the link in the show notes, we at Millennial Gems Financial Solutions, we offer bookkeeping and tax prep. So if you make sure that you schedule a consultation, we can sit down with you and discuss how we can be of service to you. We'll make sure you clean your books, maximize your deductions, and make sure you're not donating any extra money to the IRS. And while you're there on the website, why don't you buy for free my tax deduction checklist for both business owners and individuals, and cop the A to Z deductions list if you are a small business owner. And like I said, it's for free. It'll make you feel like you found like a hidden treasure. All right, y'all. Until then, keep your money tight. Your deductions are recorded and your receipts ready. See you on the next one. Peace.